I would like to welcome FDIC Chairman Travis Hill. Welcome back. Last time I saw you, you were the vice chair. So now congratulations to you. I know your life. Is it busier? Is it different? Any major change in?
I would say it's substantially busier.
I can imagine. I guess one of the things that's probably kept you busy. A couple of changes in policy. One has been the Genius Act, which is, and by the way, for all the people in the back, there are these I feel like now I'm the professor talking to my students. There are lots of chairs here right in the middle if you would like to sit down. But when it comes to the Genius Act, it's not just legislation, it requires lots of implementation that does keep you busy. Where does that implementation stand now? What does the process even look like for you?
Sure. Well, hi everyone. Great to be here. So in terms of the Genius Act, so we have a number of responsibilities that Congress assigned to us at the FDIC. Our primary responsibility is that we will be the supervisor of stablecoin issuers that are subsidiaries of state non-member banks. So essentially, if FDIC supervised institutions want to issue stablecoins, they would have to set up a subsidiary, get approved by the FDIC, and then supervised by the FDIC. The OCC has the primary responsibility in the sense of licensing and supervising non-bank stablecoin issuers, but we would oversee our supervised institutions. And so from a rulemaking perspective, we need to issue prudential standards, so capital, liquidity, reserve diversification, interest rate risk management. There's a list of prudential standards that the statute requires us to issue and promulgate. So that's one piece of what we're working on. And then there's also an application and licensing framework, which again for us would only be for our supervised institutions. We also have some responsibilities that would apply to the entire stablecoin industry. So establishing limits on IDI's ability to hold stablecoin reserves, restrictions on misrepresentations related to deposit insurance. Again, these are other things that were specifically given to the FDIC in the statute. And then the one other big piece is we have a seat on the Stablecoin Certification Review Committee, which is chaired by the Treasury Secretary. And that Certification Review Committee has several responsibilities. One is if there are large publicly traded non-financial companies that want to issue stablecoins. A second is looking at state regimes to see if they're substantially similar to the federal regime. And then a third is looking at foreign stablecoin regimes to see, again, if it has comparability to the domestic framework.
Super interesting. Just as sorry if I'm not keeping up to all the day-to-day by this, but in terms of that one Treasury committee, has that started, or is it like, are people still organizing and getting the infrastructure to support that?
The latter.
Yes.
So we're in the process of working with so the three seats are for Treasury, Federal Reserve, and FDIC.
Yes.
And so we're working right now on kind of getting MOUs in place and starting to get all that work up and running.
Got it. So you named a very, a vast array of things involved in the implementation of Genius. You had also named, okay, we have to figure out the capital, we have to figure out, deposit risk and the like. Is there something that's technically easier to do in terms of that list? Are there sort of harder and easier things for the FDIC when they try to tackle that particular list?
Yeah, I mean, I think the application and licensing piece, I think for us is going to be pretty straightforward. Again, given that the potential applicants would all be institutions that we already supervise, I would anticipate that being a relatively streamlined process, and I think the sort of setting up that process is not going to be particularly difficult. I think the pieces that are probably going to be more interesting with sort of deeper policy issues is some of the issues that will come through the certification review committee. Again, looking at non-financial companies that potentially want to become issuers, looking at state-based regimes, how to kind of compare those to the federal regime. I think those are areas where, again, there's probably more complicated policy issues at play.
Yeah, it's just interesting your earlier comment about getting an MOU sort of situated between all the different banking regulators and interest. I assume that's also as much to streamline policies so that everyone is literally working from the same page as it is just getting the work streams up, which is super, super interesting. I'll circle back, I guess, a little bit later to some of the stablecoin and the Genius Act issues, but obviously when you came into your new role, there were a variety of other concerns, even outside of the Genius Act. One was the question of debanking. What have you've obviously had a seat in those conversations before. Has your thinking evolved? Are there any more solid conclusions that you've been able to reach when you think about debanking? Now, obviously it was a criticism and a concern coming from the crypto industry, but it's also a larger meta issue as to the role of banking regulators and access to deposit taking and banking services.
Yeah, so I think as a general matter, I think we want to have a banking system that serves all of America, that serves all law-abiding customers and businesses. From the FDIC's perspective, we've done a lot of work on kind of studying the unbanked population and ways to try to promote more financial inclusion. I think the efforts to address debanking fit into that broader conversation. And again, whether it's debanking of crypto companies or conservatives or people from certain religious backgrounds or socioeconomic backgrounds, I think whatever it is, again, I think the sort of high-level goal is a banking system that's going to serve all of America. Obviously, there was the executive order over the summer, which we are working to be responsive to. So we have a number of things that we're reviewing. We did send some request lists to some of our largest institutions. We've been looking at policies and procedures of institutions. We've been looking at complaint data that we have. There are several other things we're also looking at. Again, so I think right now we're still in the process of kind of conducting these reviews. And then from a policy perspective, there's various things we're doing or considering. We just jointly with the OCC issued a proposed rule on reputational risk, and the objective there is it would prohibit examiners from criticizing institutions on the basis of reputational risk, and it would also prohibit encouraging banks to not serve customers on the basis of political or social or religious views, et cetera. And in that respect, when we talk about reputational risk, we're talking about the risk of changing public perception for reasons unrelated to the financial condition of the bank. So, if there's something that happens that causes a loss of confidence in the bank, then of course that's something that is fundamental to banking and bank supervision. But reputational risk, we're talking about something different, which is sort of more subjective impressions of reputation.
Well, let's maybe dig a little bit deeper into the question of sort of threats and opportunities to the bank. This question and the issue of custodying of crypto assets has been around actually for several administrations, and there's been a little bit of back and forth, but there's been some real movement now. Practically speaking, maybe we can talk about what just custody means for you, but also more in a technical measure, when a bank custodies crypto assets, what kinds of considerations do you think about from a regulatory standpoint, or what kind of expectations do you have from a regulatory standpoint about how that's supposed to be facilitated?
Yeah, so prior to this year, there were major obstacles to banks being able to engage in custody of crypto assets. Part of it was the prior notification guidance that the agencies had put out, which basically required institutions to get essentially pre-approval from the regulators before they could engage in activities related to crypto assets, which made participation in these activities more difficult. And then there was SAB 121, which imposed accounting treatment that made it very challenging for banks to provide crypto services. Obviously, those things have changed now. We've rescinded those prior notification requirements. The SEC rescinded SAB 121. So now we do have banks that are engaging in providing crypto or custody services for digital assets. Custody is a long-standing permissible activities for banks to engage in. It's a core function of the banking system. So now we do have banks that are providing that service. That includes things like custody for collateral, for the digital assets that's pledged as collateral. I think from our perspective, if banks want to engage in this, they do need to have the technical competency to be able to kind of safeguard crypto keys and things like that. We did issue along with the OCC and the Federal Reserve over the summer guidance on safekeeping, which addresses a piece of sort of the
I thought that was actually quite interesting reading, and
interesting is a
no, I mean, okay, that's true. I'm boring, but it really was quite interesting, and I actually thought it was underappreciated that the document went out. It was, okay, well, there's risk management guide, but it was quite interesting, and it went into a lot of detail on some of those technical areas.
Yeah, so I think other areas, things like obviously cybersecurity is a big piece of it, AML and sanctions compliance. So again, I mean, I think from our perspective as the regulators, obviously an institution needs to have the sort of competency and infrastructure in place to be able to engage in that type of activity. But I think the notion of we want to push all of this outside of the banking sector, I think that's an ill-advised approach. And so again, custody is a core function that the banking industry has long provided. And
yeah, well, that banking industry, as we were talking about with Elise, is evolving. And while the fintechs may have been at the forefront of using and deploying AI and generative AI, they are starting to catch up and trying to adapt to a world in which it is ubiquitous. From a regulatory standpoint, for your priorities, what's your take on Gen AI? What kinds of transformations are you seeing? But also, which of those transformations are the ones that are most relevant to your role?
So obviously, AI, generative AI. I mean, these are technologies that are potentially revolutionary to many aspects of daily life, of society, and how our economies function. We are seeing adoption by banks across a large range of areas. Fraud detection, that's an area where some of the credit card banks were sort of early adopters in, but we're seeing it more broadly. Credit underwriting, obviously banks have been using machine learning and other types of AI for a number of years, but as the AI tools become more sophisticated, that's an opportunity to get more insights into evaluating credit worthiness and potentially also to be able to kind of underwrite components of the population that maybe wouldn't have access under more traditional underwriting methodologies. AML compliance, transaction monitoring, things like that. Also just sort of the things like content generation, marketing, customer service. I mean, those are things that, again, companies across all industries are starting to utilize, and we're seeing it in the banking industry too. Being able to process and glean insights from large data sets, that's an area where AI has tremendous potential. So I think from our perspective, we're kind of seeing adoption across a lot of different areas. There's a huge amount of promise there. I think from a regulatory standpoint, we want to foster an environment where innovation is encouraged and possible. Obviously, we want to make sure banks are doing it in a responsible and safe and sound way. But to the extent that these technologies are being developed in society, we want banks to be part of that. I think from our perspective at the FDIC, I think over the longer term, there's a lot of promise for ways that it can revolutionize how we supervise banks when it comes to things like reviewing loan files, things like that. I think those are not things we're going to be ready to do in the short term, but they're things we are thinking about over the longer term.
As a kind of supervisory technology and upgrades. Very interesting. Well, the last time we talked as well last year, licensing was a big issue. And when you look at the rate of sort of new bank creation or licensing, it was remarkably small. I can't remember all of the data that you provided, but the audience was a little bit left aghast. I'm going to guess that that's been something that you've been thinking about. Maybe you can share what your priorities are and what you've been working on.
Sure. Yeah. So trying to encourage de novo activity is a big priority that we are thinking a lot about at the FDIC. As you noted, the amount of new banks has really fallen off a cliff since the financial crisis. From 1995 to 2007, the lowest amount of de novos in a single year was 93. Virtually all of those years had triple-digit new banks. Since 2010, the total number of de novos over 15 years is less than 93. So we had, the amount in the lowest year in the kind of decade leading up to the crisis is more than the total number we've had since then. I think it's
something.
Yeah, it's probably not realistic to think we're going to get back to sort of the pre-crisis numbers, but I think trying to turn on a pipeline is critical. When we look at consolidation across the banking agency, people often point to M&A and mergers, but the truth is that the merger rate has been relatively consistent. It's kind of noisy year to year, but over the longer spans of time, it's been pretty consistent for several decades. Whereas again, the de novo activity is what has really, from a statistical standpoint, it's the fact that there's so little new entrants coming into the system is what's causing the number of IDIs to fall so precipitously. So from our perspective, again, I think we're still sort of in the policy development phase, but we are looking at capital expectations. That's one of the big challenges and obstacles is institutions struggling to raise the amount of capital needed to form a de novo bank. We're continuing to think about our process. So whether we should have like a conditional approval process, something where institutions could get a conditional approval, use that as a mechanism to then have some time to try to raise capital. Again, there's sort of pros and cons to different ways of doing things, and then we're sort of looking at a plethora of other just sort of granular things about our analytical framework, things like how we analyze managerial resources, which is one of the statutory factors. Are there ways that we can be more flexible in what type of experience we're looking for in management teams? Again, we want to still recognize that a deposit insurance is something that there should be a high bar to meet, but at the same time, in order to have a meaningful pipeline, we do need to have just some more flexibility in trying to encourage more interest and activity.
Just listening to you, and later we'll have Paul Atkins coming by as well, and I was at an event with him in New York where he spoke last week. But just even listening to these, there are certain kinds of symmetries that you hear across finance, right? The decline of IPOs, the decline of de novo banking. What does this mean in terms of, and they're weird, sort of a spectrum somewhere between sort of the capital access to financial inclusion sort of spectrum, where you sort of see this question about what do you do, how do you address it, what are the new kinds of policy approaches. even though you have 15 seconds. Being a regulator is hard. Like, you get blamed when things go bad, and you never get credit when things go well. How do you deal with that?
Hope things don't go bad. And,
It sounds like being a law professor.
I don't know. Ben Bernanke won a Nobel Prize, so.
Yeah, it's true. It's true. Good luck. Hey, thank you so much, man.
Appreciate it.
I really
Thanks.
appreciate it.